What's going on, guys? So today I'm going to be going over a money setup, and this is a setup that you could find multiple times during the week on any time frame, and it's usually going to give you a good risk reward, and it's fairly an easy setup to catch. So I'm going to be going over it. So as you guys know, as I talk about, London session tends to make a high and low for then a New York session to continue. And if you don't know what that means, it basically means usually it depends, the day of the week depends. It's not always going to happen every single day, but usually depending on the direction of London session will also give you the direction of the New York session. I'm going to show you that here. So if you look at this arrow, this is the high that London made. It rejected 34,500. Price came up, rejected this order block up here. This is a minor 1 hour order block, but I wasn't using that. I wasn't keeping that in mind when I was taking this trade. I was only keeping in mind this high that London session made that then pushed price down. And then around this time at 6 in the morning, New York made a low. It started to then retrace. And this is the high and low that I then used my fib from. And if you also realize, with that London session high that it made, it also created a 1 hour order block. So we had a 1 hour order block, and we also had the fib level from this high and low in confluence in the same area. This is a trade that I missed out on, but I'm just going over because this is a trade that I was talking about in my Telegram chat, explaining I wanted to get in. I was actually waiting for a price to come into this red line, and that red line is the 50% mark of this 1 hour order block. So I wanted to get in there to have my stop above, just to have the best stop. But in this case, it didn't make it to that 50%. It came close to the 79 and started to fall. But if you look, price then started to retrace, came into this area that had a lot of confluence, had that 1 hour order block, and also had that fib. And then what happened? This is why time of day is very important. When price came into this area, it was like 9:15, 9 o'clock. And then started to reject. Mind you, this is a screenshot of the hour time frame. I'm going to show you another example on the live chart. But in this case, this was a 9:30 push that then pushed price down. And it then, where to go? It started to aim for these lows that were all down here. So let me go over this again. The London high, it made a high, starts to fall. So we anticipated the price was then bearish and wanted to continue bearish for New York session. And mind you, this was on a Monday. Usually we don't get good trades like this on a Monday, but in this case we did. So we had the London high, New York low, drew the fib. We had the order block up here with the fib levels. We had a lot of confluence. Time of day, price was in this area around 9:30. And the reason 9:30 is very important with US 30 because that's the New York Stock Exchange open, and that's when the market tends to get a lot of volume and a lot of orders come into the market. As you can see, these candles were huge compared to all these candles previously, and you could tell that means there's a lot of volume. So as you see, this one candle fell 205 points just from this one candle. Price started to fall and it just was gone. This was no drawdown. If you would have got in, at 70.50%, which I always recommend, then you would have had little to no drawdown. Matter of fact, you probably would have had no drawdown depending when you got in. This is probably like a 2-3 pips, if anything, for a 205 pip reward, depending on if you held it. If I would have got out at this low, I would have cut 80% of my trade and let the runner run. That's just how I usually do it. But now, let me just show you when I was looking at this trade in this Telegram. Let's get this off the screen. Come over here. This is when I was currently looking at the trade. As you can see, I was waiting for price to come into this area. It came up, started rejecting, and then from there, price just started to melt, broke this low. And if you also look at the areas that price came to, these were also higher time frame order blocks and higher time frame fib levels that were then here. And now I'm going to show you guys another example right here that happened today. Is not the same example, but it's the same concept. In this case, it didn't respect the London low and London high because the London low was right here at 2 in the morning. It made a low, and I was expecting price to possibly retrace into it to continue up, but in this case, it just kept pushing up. But where did it come to? If you look on the 4 hour time frame, the last bullish candle before the first bearish, So this was a 4-hour order block. I marked up to 50% of that order block. And if you also pull the fib from this high to this low, all the way down here to 34,200, which this candle came to, you also see that the 79 is right here. So it rejected, came past 79 a little bit, came to the 50% of this order block, and then started to reject. These are very good setups that you can catch almost every week. Every single week. It's not every day, every week. If you have the patience, you just have to wait for price to come to these certain areas that have multiple confirmations. The order block, 4-hour order block at that, then the 79% of this fib. And also, if you keep in mind right here, there was an hour order block right here. So there's an hour order block, a 4-hour order block, and it came to the 50% of that 4-hour order block. So there's multiple confirmations in this area for you to get into this trade as a sell. And also keep in mind that it was already in this downtrend. So all it did was create another higher low. That's all it did. So it kept this downtrend, rejected these areas that had high confluence, 4-hour order block, 1-hour order block, and the fib short. And then where'd the price go? Now it's falling, and the area that I'm anticipating it to possibly go to after falling 165 pips already is to possibly come down to this area down here to overall possibly continue this uptrend, because you got to keep in mind the overall picture. This is very bullish, and I don't expect it to break lower. If it does, then we'll start looking at some more sells overall, but until then, everything is looking bullish. So let me go back to the Telegram where I have the pictures of this today also. Where is it at? Overall, as you can see, I had these marked up, the 1-hour order block, the 4-hour order block, 50%, and these fib levels when price was down here. I was expecting price to keep on pushing up, which we waited around this time. If you look, was 910. So price was rejecting at this time. Started to push up around 924. And then from here at 939, this is when price started rejecting. And then from there, it just started to melt. And these were areas that I was talking about for multiple hours. Mind you, we were all the way down here, and I still had these marked up as an area that I really wanted to get into. And as you can see from there, just price melted. So guys, these are very good setups that you can catch. I always look for the London continuation. Look for a low or high that London makes. You want to look at the daily time frame, because if you look overall, yesterday we had a bearish day, so we're expecting overall to have another bearish move. So what does that tell us? We had a bearish day, bearish move, so overall we wanted to see bearish momentum, which we got when it came to these areas of high confluence. So that's really it. I just wanted to show you guys these setups that I have gone over. It's only Tuesday right now, but these are two great setups that we've had during the week already. And I just wanted to show you guys that these are setups you can catch every week. Simple, just with discipline and wait, you can catch pips during the week, and a good amount of them with a very low risk reward. If you would have got in at the 50% with a stop above here, above the order block, that's a 35 pip stop loss. And mind you, this is on US 30. 35 pips is nothing. 35 pips for potential 150 or 200 if it keeps going lower. And even with the other trade, where was it at? The other shit that we're talking about right here. If you would have waited for price to get into this area, this order block up here, stop loss above here, also 30 points for potential 250. That's a lot. That is a lot. But yeah, that's really it. I just wanted to go over these two little setups that I've seen in the last 2 days just to show you guys, because these are very clean setups that you can catch on a weekly basis that will give you a good risk reward. So that's really it, and I'll talk to you guys later.